Welcome to the ALX Show, your premier source for DFW real estate data and insights. Let's get to it. Hello, and welcome back to another episode of the ALX Show. Today, we have Josh and Patrick joining us again post-election. So this is going to be some quick takes and insights and maybe some hot takes on what we're seeing, after Trump getting elected and how that might affect the real estate market across the different policy agenda items, if I can state it like that. So I just want to hear from you guys. I mean, you guys are in this all the time and hearing from a lot of different people. Like, what's your take? Okay, Trump is the president-elect. He's starting in January. And how do you see what has happened in the last 2 weeks affecting the real estate market? And then where do we go from here? What does this look like?
It's probably not what we expected, right? As far as, Trump obviously wins the election and then bond yields moved up, which we can get into that for good reason. But I think the important thing is that optimism is high. I think that everyone is expecting a pro-growth, pro-business policy, and that's what we've been waiting for. So we're expecting maybe some deregulation, just opening things up a little bit and kind of get to work. So that's what I'm getting. The sentiment I'm getting when I talk to people. Like I said, the numbers are still not great. They got some numbers out today, house starts, things like that, building permits that are a little under, what consensus was. So we're still battling, kind of a difficult environment, especially on the supply side. But a lot of that's tied to interest rates. But now that sentiment's picking up, I think we're going to see people start to move forward, and they're already excited. We're excited. People are excited about what's coming. That's right.
Yeah, having a pro-business president does mean a lot for a lot of different reasons. But one of the things that has, if I could say, caught surprise was the treasury yields, that they're still fairly elevated. Can you talk about why that might be or what that means for you guys? Because I know the 10-year treasury is like the number that you guys watch on the financing side. So what does that mean? What does that look like now?
Yeah, I want Patrick to jump in here, but I think there's some uncertainty around coming policy. Trump's talked about tariffs and tax cuts and onshoring and mass deportation. So what does that do to inflation and also to spending? Does it mean that does it mean the government's going to spend more, and if so, then they've got to raise more? So that's going to put more debt out there, which is going to increase yields to make it more attractive to bring in investors. So I think there's uncertainty, and I think that'll smooth out. We just need to get a little bit further down the road and hear a little bit more about the details of the policy and how it's going to play out. What are you thinking?
Yeah, I think the same thing. I think that there's everyone is surprised at how the labor market's performed. I think everyone thought that we were setting up for a ton of rate cuts and yields had reflected all that. I think that expectation is changing. We'll see if that bears out or not. One thing that I really don't agree with, and maybe I'm way wrong and just not smart, but a lot of Fed commentators or Fed governors will say that the reason the increase in yield is related to term premium, which just fancy way of saying if you're going to hold something longer, like a 10-year note, that you need to be compensated additionally for holding that versus, a 2-year note. And I just don't see that in the yields yet, because if that were to happen, then, the 2-year yield would not have also moved up as much as it has too. I think, today their 2 and 10-year yield spread is probably around 20 or so. No, not even, like 12 basis points right now. And it was 20 basis points when we got down into the mid threes, a month and a half ago or whenever that was. So I think that a lot of the increase in yields has to do with the economic data that we keep getting seems to be stronger, at least on the surface, than what everyone was expecting. I think it's a huge driver of it. And then I think the inflation picture, for whatever reason, just seems to be a little bit stickier than what other people were thinking too.
Well, it feels like stalled out a little bit, but so much of that is shelter, and we've talked about shelter a lot. Patrick's talked about shelter quite a bit, and the way that they come to the inflation figure, and is it outdated, and is it really capturing real time cost of living? And I mean, I think we could say confidently that no, it really isn't. But I mean, the Fed knows that too. You know, they understand the way that it's recorded may not be totally accurate to the here and now, and certainly not to where it's going. I think if you look across the country, rents not in every city, but in most places are coming down. Certainly from where they were. Like here in DFW, we had a ton of supply hit the market, especially in the multifamily space, which did bring rents down. Now I think that supply has since leveled off and dropped, so we're going to see rents start to accelerate again as soon as early next year. But that's still the primary driver for inflation. So I mean, how do you solve for that? I don't know, but the numbers are going to continue to be high if that's the main driver. Now, Patrick did, we were talking the other day, and he was talking about the readings from last year that are about to come up on the year-over-year numbers. You can talk about that early next year.
Yeah, I mean, we are set up for and hopefully some really strong movement in inflation. I think 2025, the first 4 months of the year, the numbers that are rolling off of core CPI are each 0.4%. So for like the first 4 months of the year. So, I mean, there's a real opportunity that will make some meaningful progress in the first quarter of 2025 on the core CPI number, which I think can only bode well, obviously.
And inflation is still a problem. I mean, the last 4 years it's gone up to 20+%. So I mean, people are hurting, and it's still an issue. And it's going to continue to impact people and how much they can spend on everyday things, including how much they pay for rent or what house they can afford.
I was talking with some friends in a text thread the other day, and I was like, so what are you guys doing for Thanksgiving or whatever? And somebody sent this meme back that was like, can't go outside. If you go outside, it's $300. So I got to stay inside. It's like, man, I get it, man. So I think because of some of these numbers that you guys are talking about, and I'm sure the Fed governors are all looking at that and debating about it right now. But I think a month ago, people were thinking, okay, great. They're going to cut rates again in December. It's going to be all good. But it sounds like now maybe there's some waffling and that maybe not cut rates. So I guess it remains to be seen what they'll do in a few weeks.
I think it's still more likely than not. I mean, as we see here today, it's about 50% likelihood that they're going to cut in December. But that's come down. I mean, a couple weeks ago it was at an 80% probability, and now I think we're in the 60s. And it goes up and down depending on what kind of macro data comes up and what it's telling us. And the macro has been stronger than I think what a lot of people anticipated. Still, it's been pretty resilient. We got a bad jobs number. That wasn't. We talked about that. We'll see. The next jobs report will be, crucial. So,
Patrick, you were talking about. So we have our indicators pulled up. If you go to alxrealestate.com, look for economic indicators, and you'll see our dashboard of 50 different metrics and how that's tracking year over year, whatever the prior data is, and links and last updated figures. So go check that out. But Patrick, you were mentioning, speaking of jobs, this payroll growth number. It's at 12,000 jobs right now, 78,000 prior, and you had some insight in that. Can you talk to us a little bit about what that looks like?
Oh, absolutely. So I think the market kind of brushed off that really, really poor payroll number, 12,000 jobs, which was buoyed exclusively by government and healthcare job gains. All the rest, manufacturing, business, financial services, all of that was negative job growth. I think everyone wrote it off really quickly because of the 2 hurricanes and because of the Boeing strike. But and you guys tell me how you feel. It just, the more that I think about and like digest that as the potential reason, it just doesn't add up. You tell me what you think. I have more, but
you're better speaking on this than me. But no, I agree. That doesn't seem like it would have a big enough impact to sway the number so dramatically. Is that
well, in the second hurricane, I don't want to get the names confused. One went through North Carolina, happened in the middle of October. And so they even note in their release that they're not necessarily sure if the survey data was even impacted by that hurricane because there had been responses already received prior to the impact of the hurricane. And so that's a piece of it. And so I think that next month is going to be a really important jobs number. It's going to tell us a lot. It's going to tell us if that truly was kind of a temporary blip of really poor performance, or if it was beginning to indicate a significant trend. And I would expect that it's probably going to be a light number again too. Like we've got on there too, Brandon, the revisions of 78,000, or the last month of 78,000 prior. That's revised down from the initial number, which was, oh my gosh, I don't remember now, at 140 or so.
Yeah.
And so, I mean, we'll see, but I think that can tip the scales real quickly, and that will be a job number that the market will take a lot more seriously than this one, which was easier for them to kind of brush off.
So you're arguing that payroll or labor market is deteriorating a bit, maybe because of interest rate increases over the last couple of months? Is that what you're saying there? And that it likely may over the next few months?
I think it's deteriorating. I don't know if it's deteriorating like seriously or significantly, but it's not, I don't think, as high powered as it has seemed in previous readings. I don't think that's attributable to the run up in yields now. I think it's just because of the last 2 years of tightening the screws and kind of finally filtering through. But
and Powell said at his last press conference that he does not see the labor market or the wage increases as inflationary. He doesn't see additional inflation coming from increased spending power just through wage increases, which is, and then we were talking about the job market. We're also seeing like the quits are down, and the money you make to switch jobs is down. So people are not making as much money to change jobs. They're staying where they are, and they also don't feel as confidently if they do leave that they'll find another job, which also speaks to how people are feeling about job prospects and other opportunities.
Well, I'll add this real quick. And if you look in that payroll report, they've got the last 4 months of the job gains or the unemployment figures. And this last report, October, was the lowest amount of temporary layoffs of the last 4 months, and even lower than the previous October 2023. So to me, and again, maybe I'm thinking of it too simplistically, but that just seems that it's not necessarily this temporary picture of poor number that we thought it was.
Yeah.
Well, shifting gears a bit, you guys were also talking about, Josh, you had mentioned a few other policy items on the Trump agenda coming up in the next few months, deportation being one of them, and there's a couple of other components, onshoring maybe. How do you see some of those things? I'm sure our listeners are pretty familiar about some of the main, kind of the headline campaign items, but I'm curious, like, how does that impact real estate, or how do you guys see that shifting maybe in DFW, or what's some of your thought process behind some of those items?
So if a lot of people that are here now do leave the country, then that obviously affects demand for one side, which, depending on, we are undersupplied. So maybe there's some equilibrium there that we're not affected too bad as far as vacancy. But you have a large contingency of the labor force potentially leaving.
Yeah.
So, what does that do? Does that now you got to fill those positions,
especially in construction? Yeah.
Yeah. So, does that increase wages there? I mean, in order to get people to fill these openings, then you're going to have to entice them. So, is that inflationary that it's going to increase wages? There's a lot of unknowns too. Like when the Trump administration says they're going to do these mass deportations, we don't really know what that means. Does anyone know what that means? Like, logistically? I don't even know how that works. So I know they say they're going to go after criminals first. So obviously that's good. We want safety. But what does it look like for the people that are working and contributing to the to our economy right now, and what are the impacts of those people leave? That's a big question mark, and that just on just basic supply and demand. If you lose workforce, then as a employer, your demand for it, goes up, and you've got less of a supply, so you're going to have to pay more to get it. So you have to compete with others for it. So I mean, it makes sense that it would drive wages up. Now, if you can increase productivity, then that's one way that you can keep overall costs down. But in addition to that, onshoring, if companies are coming back, to the United States to do business, then what workers in the United States are paid versus what they're paid in other parts of the world is more expensive. So that's another thing that's going to potentially drive wages up, is bringing that labor that you're paying less for on the other side of the world and bringing it back home. That's gonna make expenses go up, and that's eventually going to be passed on to the consumer. So there's just a lot of unknowns. Tariffs, another one. People hear about tariffs all the time, but is that going to be inflationary? Just that in the sense that it's going to raise prices on imports. And all this goes back to if people are spending more money on these different things, imports in particular, then how much money is going to be left to spend elsewhere, and what's it going to do overall to the total basket of goods and services, what everything costs. And it's just, I don't think anyone really knows. I mean, what we're getting into, there's a lot there. We're kind of briefly touching the surface here, but we don't really know what kind of impact it's going to have.
And anecdotally, on the multifamily side, we've been getting reports from managers across, heavily Hispanic areas across DFW that really starting right when the election happened, that leasing traffic has slowed down a lot. And so, certainly don't know what the cause necessarily is, and it could just be coincidental, but we've been hearing that from people, around the Metroplex, that traffic has certainly dipped in those areas, and could be some uncertainty about what Trump's plan is going to be.
Well, you've got tax cuts too, which, in my mind, I think tax cuts ultimately lead to growth, which leads to more revenue for the government, more tax revenue. But a lot of people are concerned that, well, if you cut taxes, then you're pulling away from what the government's taking in, and now we're going to have to borrow more to make up for that deficit. So, but in previous terms, tax cuts have spurred on productivity, which have also led to growth, and led to higher GDP, and then you've got more tax revenue coming from more activity spurred initially by the cuts that people are concerned about. If you just cut and don't do anything, don't grow, sure, that could potentially be a problem. But if the cuts spur productivity and they lead to more business growth and expansion, then ultimately you'll have more tax revenue than you would otherwise.
Yep. And with Musk and Vivek Ramaswamy are going to be heading up the Department of Government Efficiency, otherwise known as DOGE, which I think is hilarious. But yeah, I guess we'll see if that maybe helps, support that kind of growth narrative despite taxes being cut. I know that's a critique of the left, but who knows? So I'm curious, on the deportation concept, I'm not super convinced that it's a very serious policy item. I mean, maybe you guys know more than I do. It seems sort of posturing or theater, because surely if you have a pro-business candidate and he's arguing for deportation, that's going to severely hurt so many businesses. I mean, there's millions and millions of undocumented workers in the U.S., like a lot of them in construction or agriculture or things like that. Like, surely that's not good for a lot of businesses and other jobs, and because they're paying at a lower wage than the U.S. would take, and so on and so on. So yeah, I don't know. I'm just not convinced it's a really serious, policy, but I could be wrong. I have no idea.
Well, I think it's funny too, because there's kind of this idea, I think, out there that when they discuss this, that deportations are like this new thing that we haven't been doing. When every administration, even the Biden administration, has deported undocumented immigrants. I mean, Obama did it a bunch too. just a common thing that we've always done. And I think that they're clear that they want to start with the ones who are not doing good things and, engaging in criminal activity. And, that's going to be step one, and we'll see how it progresses after that. But I think that's going to be the priority more than anything, on a really large scale.
Yeah, I think so too. I think they're going to first look to who's potentially a threat, if they do have criminal history, or if they're here and they're not working. Those are going to probably be the groups of people that maybe they look to first. I don't know. As a country, we need immigration. We need people to come here. We need people to come and contribute. So my desire would be that, we're getting into with the laws of law and certain, we're going to feel really strongly one way or the other. But if you're coming here and you're doing the right things and you're working hard, then you need to do it the right way. You go through the legal process and do it the right way. But it's important that people know that if they come in and they do it the right way, then they can have a relatively quick process to come in and be a part of our society and not have to worry about it, and just to continue contributing and making America what it is. Because we talk about birth rate and so forth. I mean, we need a new infusion of workers to come in, and we need a lot of times. The immigrants who come in are highly productive and they really help our economy go. So the people that are doing it the right way and contributing, and they're kind of standing up on their own 2 feet and providing for their families. I mean, those are the people that we need to embrace and accept. Now they got to do it the right way though. We have to have the rule of law, and it needs to be legal immigration. But I think it's critical that we fix the immigration system so the people that do want to come in and do it the right way, they're able to do that, and we're able to properly vet them, but they're able to come in and contribute and ultimately live the life that they're seeking.
Yeah, amen. To Patrick's point, I just looked up, this is statistics from the Department of Homeland Security, and every year several 100,000 people are removed or returned, and this is going back to 1892. So 1892 to 2019, just about every year in the last 10 or 15 years, it's been 350,000, 330, 290, 330, 330, 400, 430, 415. So yeah, it's left and right administrations are carrying out deportation. So anyway, well, gentlemen, this is always fascinating talking to you. I appreciate your perspectives and the quantitative aspects that you look at a lot of your business. And I'm really excited to see what is going to happen over the next couple of weeks, couple of months. I know you guys will be tracking it in detail and keeping your investors and other partners abreast on what is happening. And we'll continue to send out this information. So please follow along. We have lots of social media channels. Just look up ALX Real Estate, Google us, alxrealestate.com. You will find all kinds of information with blogs and other resources, in addition to our economic indicators dashboard that we update every month and check out. So all that to say, it's a very quantitative team at ALX, and we're really grateful for y'all looking at these things for us, so I don't have to spend all my days looking at all the charts like y'all do. Okay, well, we will see you next time. We'll see some, I think new numbers are coming out Friday or maybe the next week, but then we're gearing up for what the Fed is going to do mid-December and set up for 2025.
Yeah, that's right.
All right, guys, we'll see you next time.
See you soon.
All right. Hey, Brandon.